there are cheaper alternatives to using a 401k plan. The 401k plan charges you anywhere from 1 to 1.5%. And the market over 20, 30 years returns on average about 4% a year. So what you need to understand is that you investing in your 401k over, the long period of time, over a 20-year stretch, you lose a lot of money in fees. You could lose up to 25% of your total account value, what it potentially could be if you weren't paying all those fees every year. That's why ETFs are great. With ETFs, you could get a well-diversified portfolio of stocks. You could get a portfolio of bonds. You could get a portfolio of real estate. You could get a portfolio of physical gold assets, Bitcoin, whatever you want. ETFs are great overall things to invest in. And it's very simple to keep your fees low. One issue people have when they invest is that the brokerages that they use charge them a ton of money in fees. So there's these commission-free ETFs. They're free to trade, and you should be getting into these. These are some of the best investment vehicles out there right now, given the price. When you look at Charles Schwab, for instance, Charles Schwab has some of the best ETFs out there. They're the best value in ETFs when you think about it. Their total market, SCHB is the ticker. Total market ETF compromises a lot of mid-cap and large-cap stocks, and they're the players that you would think generally. The top American companies. You have Apple, Google, Johnson & Johnson, Exxon, names like that. And it's very well diversified. They have a lot of holdings, and they're not invested too much in any given stock. So the total market is a great investment to make. It's well balanced, and with Charles Schwab, you can get in and you can contribute money little by little and make those contributions and really reduce your fees. That way, you don't have the fees associated with your account the way you do with your 401k or any other type of investment account that you want. You can further diversify your portfolio with getting into these other free ETFs like AGG, which is aggregate total bond ETF. All different types of treasury bonds, all different maturity dates, all different prices, all different yields. There's a ton of different options. When you look at their holdings, they have almost every type of bond you can think of in there, and they returned historically 4.6%, somewhere around there. If you would have made an investment 10 years ago, you would be up almost 60% on that investment as of right now. So the growth is very steady. When you have bonds, even when the economy and the market crashes, bonds are quick to recover. They're the first thing that those bond ETFs will be the first thing you see recover after a market crash. And they're not as volatile, as the stock market. I would also recommend that you hold real estate. So SCHH is another Schwab ETF that you can get, and commission free. And with that, what you can do is reduce the cost of owning real estate. You could hedge your real estate portfolio if you have any real assets, and you pay only a 0.07% expense ratio on that account. So you're doing great. You're when it comes to those REITs, and those ETFs are incorporating the biggest REITs that are in the country, really, which are actually great things to invest in the long term. Real estate historically is a great creator of wealth for people in America over the long term. So what's great about these Schwab ETFs is SCHB, for example, your expense ratio is 0.03%. It's the lowest in the industry, and because of that, they perform great. And when you're talking about free commissions as well, you have like a real winner on your hands. AGG is very similar. It's a 0.05%. expense ratio, and SCHH, which is the real estate trust, REITs, they're 0.07%. So they're all under 0.1% in fees that the ETF takes to manage the portfolio. And you could trade them for free. You can make incremental purchases. You can go in, buy some, and every month you can deposit some money in your account, or bi-weekly whenever you get your paycheck, and you can invest directly into what you want for free. There's no it's not like a traditional brokerage when you have commissions for free, because you can keep buying in without incurring all those crazy fees. I mean, when you think about it, if you want a portfolio of 3 ETFs only, and you're paying $9 a trade at some of these places, it's $27 every single time you want to invest. If you're investing $200 at a time, I mean, that's 15% of your money that's gone right off the bat. So what you need to do in order to reduce those fees is get your costs down as much as possible, because deposit fees all the time for trades is going to cost you in the long run and eat away at your profits. You might not even have profits after that's all said and done, if you're managing your own portfolio and you're paying these fees to trade all the time. So it's a safe option for you for the long term. Historically, in 10-year periods, you always get a return on your capital. You always do with these markets in America. Part of it is because of the currency being devalued all the time, and part of it is because our companies do great internationally. Google, Apple, all these companies are big powerhouses overseas. So when you're investing in a total market ETF, you're really investing all over the world, because our companies are making investments in other countries as well, in emerging markets. So you don't really need to diversify further if you want stocks. If you're holding our biggest companies, you have a good international portfolio already. There's a lot of exposure there to international growth, and the risks associated with it. So those 3 ETFs are commission free, and you can trade them and invest in them for so cheap with Charles Schwab. There's other ones too. If you look at Bank of America, Merrill Lynch, they have some ETFs for free. There are also ETFs for free at TD Ameritrade, Options Express, anywhere you can think of, they have free ETFs for you to trade. I choose Charles Schwab because they have the lowest expense ratio, and they've historically performed as well as anyone else when it comes to these ETFs, even though these vehicles haven't really been out so long. But right now, there's a boom in these ETFs, and it's not the type of boom that's gonna burst. It's truly valuable investment vehicle for you. You could save a lot of money by investing in the right ETFs, and you can save money in the long run, like you would with a manager fee. If you have one of these high paid investment advisors, you need to get rid of them. There's no reason anymore for you to have one of these investment advisors in 2016. With ETFs, you could build a portfolio of whatever you want very easily, and it's managed for you. There's nothing you need to do. Just set it and forget it.